All right, hello everyone. We're back at it again with another video. How do you switch this thing again? Let's go to one screen. Okay, so we're back at it again with another video. Sorry. Let me clean this up so that we can get a fresh start. Today was a good trading day. Even though price has been trifling these days and definitely been testing my patience, we are still going at it, okay? So today was a green day. Today was a good day. Today was a good day. So let's just go on with it. Let's go on with the video. So, as usual, I use my supply and demand strategy. I look for supply and demand zones. When I find the zones, I act according. Right here, we got a demand zone. And even though price touches here, it only wicked. It didn't close under, so this is still a valid point. I will not consider this area right here demand, because the red candle, the previous red candle is above, below? You know what I mean. So let's go on. I did have, okay, there's a quick supply right here. All right, so this is the analytical part of, analyzing the market. Price closed above that, so that supply zone is invalid. Now, I had my little questions about this area, because price did end up going all the way down and it wicked, showing that there was a lot of buying pressure. But I was thinking, like, during the trade, because I haven't come across like a trade like this using supply and demand, I was wondering if this was going to count as an invalidation of this demand line, and I didn't want, and because I use that as well, like in my confluences, I was scared that maybe, oh my gosh, sorry, there's like a fly here that won't leave me alone. I was scared that maybe it was invalidated. So I had like sort of a backup, but now I know that it's not an invalidation, because obviously, like I said before, price wicked out of here. It didn't close below that. And double whammy, this is also a demand zone. So that, I would say, the passing of the wicking out below, and the fact that this is even, demand, I think, it's sort of confirmation telling me that, like, yeah, like it is a demand zone, like it didn't validate it. But I was also wondering if I should take this as another point, because, if you watch my other videos, I wait for 4 demand, what do I call it, confluences, I guess, or demand patterns, and then I get in. So I was wondering if I wanted to keep this as one of the patterns. So I just kept that in the back burner, and I believe I colored this orange. Okay, so see how there's another demand zone. These are strong indications to the upside, but remember, price is still literally ranging. So, like, you can't be too confident. I know I said that, but then you see another demand zone here. So at this point, I'm wondering whether I should get in at this green candle right here, because I already have 4 touch points. But to be safe, on the safe side, and because we're still in a range, I didn't count this as a demand zone, okay? No, sorry. I kind of erased this as the demand zone here. So what I did was I erased this, and then I was like, you know what? Okay, because the price is still ranging and we have 3 touch points, all we need is one more touch point of a demand zone. I say touch point like it's literally a touch point, but no. I'm just looking for, and notice how price is making higher highs. So I see another demand zone right here, and this is my signal to get in on the second green candle. And the second green candle is when I get in for a buy. And because price is really slow today, and it ranged from the opening of the market, I'm only going in for $1 move. You're trying to play it safe, protect your capital. Playing it safe by just $1 move, okay? Even though you can tell that market is low-key shifting to the upside here, I was still trying to play it safe because it doesn't matter. You're using real money here, okay? So I played it safe. I found my 4 touch points. I keep saying touch points, zones. So I got a demand zone here, demand zone here, demand zone here, 4th demand zone. And of course, you expect pullbacks. So my stop loss was my stop losses were going to be this demand zone here, depending on price action, and this demand zone here as well. Or stop loss could be the exact dollar amount, and the exact dollar amount just happens to be right next to the demand zone. But because the pullbacks are, anticipated, I just have these 2 zones and it's only, let me see, the stop loss. Not too much of a stop loss. But yeah, those are my 2 stop loss zones because price is still likely to wick out at this point and at this point. So you really just have to monitor price action, okay? So what I did, and we love a clean chart. So even though I've seen all these zones, right? I've seen all the zones, but I just want to make sure that I'm focusing on price action, okay? So you have to keep it mental. You have to keep a mental that price can come here and here. So after I've gotten those mental notes, I also put in alerts. I do alerts at those points, obviously, just in case price touches that. But we see prices in just a little bit of, price is slowly going up, just slowly going up. So this is the entry right here. Mark that white. And of course, as usual, price action always twerks at my take profit, teasing me, and then boom, bam, take profit somewhere around here. So I got in over here. Oh, got in over here. This was my entry, and then this was my exit. Okay. Oops. I know, I'm trying to make it very specific. Okay. So this is my entry, and there's my exit. I think price did really good today. And sometimes you really do have to look at market structure because you can somehow see that price tilts right here. You can see how price tilts. And then it's sort of indicating that that's, price going to the upside for the rest of the day. You can also see that maybe in the previous day. Sometimes if you're not sure where price is going in the opening of the market, you can see that price goes up here and then it tilts as well, letting you know that price is going to go to the downside for market open. And let me see if you can find that previous as well. And obviously it may not happen all the time, but see how you can still make a buck off of that price tilted here, but you could also see that price tilted here. So this could also mean that price will still be going to the upside. And then your points also matter if you have touch points or whatever. And trend lines, support and resistance lines. But I think I don't use support and resistance or whatever. I just do supply and demand. And that can also act as support and resistance. But I think this is honestly the best way because you don't have to worry about indicators or nothing. I suggest not to ever use okay, let me not say ever. Suggest to not use indicators because price just looks so much cleaner, and you can definitely, let me remove this, you can definitely still find your way through the market without using indicators. I never thought that I would stop using indicators, but here I am. So thanks for watching this video. I'll see you guys in the next one.